Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. Yes, the 13th, the unlucky Friday. However, let's see if it's going to be on our side somehow. We're going to talk markets, the usual stuff. By the way, this is a video preview for the webinar, which is going to happen in a few moments. So yeah, like I said, we're going to talk markets. We're going to check the charts. We'll see how the week has progressed. And it has been quite a volatile week, in my opinion. So yeah. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. I hope you're having a wonderful start because my intro here a little bit on this video did not go as planned. So hopefully it went through okay, but you know, from what I've noticed, it was a little bit shaky, it was a little bit jumpy, and honestly, I do apologize for if there's a little bit of a problem in the intro or something like that. Ladies and gentlemen, welcome. I mean, Friday the 13th should start something like that, right? Ladies and gentlemen, I hope you're all having a wonderful week so far, or had a wonderful week so far. And I know that we're still having Saturday and Sunday, but you know, this is more like should be theoretically relaxation time. However, lately we understand that it's not, because some sort of things will happen on the political side, on the geopolitical side during the weekend, and then, you know, we're all going to suffer from that on Monday. So yeah, ladies and gentlemen, so yeah, welcome everybody on that positive note. Welcome everybody to Friday's session, Friday the 13th, yes, 2026. I hope you're all having a wonderful start of the day, at least you, because again, like I said, from my side, the video started a little bit shaky. Okay, look, we're going to talk markets, the usual stuff. We have some important data sets coming out. We'll look at that. So before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to do my usual good morning in the chat room. Good morning, everyone. Good morning, everyone. So, yep, let me just double check if I'm spelling it correctly, because again, I think that this day is going to be full of surprises, full of mistakes, full of everything, full of, yeah, not the usual plan. Not everything going by the usual plan. So look, before we go any further, as always, let's also just pick up on our website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Oh, by the way, you can see here my face. Basically, the idea here is that we're going to have our webinar. I'm going to run a webinar on the 26th of March. So join in. Join in. We're going to talk markets, how we can position ourselves in these turbulent markets. We're going to, see a few different strategies in terms of how we trade, how we approach the market, and certainly, again, like I said, it should be beneficial for everybody. It's more of a like to understand what's happening right now, to kind of understand how we can, let's say, take a look at the trades, for example, if we're entering at certain levels, and what we can do, and how far we can go, and in general, how to place trades, and the approach, the psychology, the kind of the technical side of it as well. So the practical side, of course. We'll try to see what we can do with the live trades in our demo account. We'll see how we can go from there. However, I always say that these sessions are meant for dialogue, not monologue. So as this Markets.com as well. So the session, the upcoming session on the 26th is basically for everybody to communicate, and you join in, you ask questions. This is kind of more of a like a freestyle session where we will look into different things that bother you. So yeah, hopefully you'll be able to join. If not, like I said, there will be a recording. So just basically go in and register, and we'll go from there. So yeah, ladies and gentlemen, also let's jump into the economic calendar. So yes, Friday the 13th. Let me update the calendar very quickly. I'm going to jump into what happened already this morning, and then I'll pick up on what happened yesterday. But this morning, the trade balance, the UK trade balance came out. Improvement right there. There we go. Look at this. Positive territory. Wow. Hasn't been there like this for a while. I mean, okay. So let's actually take a look. What was the case here? I'm trying to find out. Okay, so GDP, before I go in further, GDP, zero. Okay, GDP year on year, plus 0.8. Okay, better than the previous, but the month-on-month number, okay, it dropped to zero. So this is a little bit of worrying, I would say, given the fact that the UK economy is struggling a little bit, in my opinion. And I think that they are facing right now a little bit of a few problems here and there. Certainly, geopolitical tensions are not helping them as well. They're putting them into a bit of a difficult spot. So the U.S. and Israel are putting UK in a spot where they could become a target as well. That's what friends are for, right? Look, we'll see how it goes. Of course, we'll see how it goes. How it's going to go further. However, look, the trade balance. Now, this is what I'm interested right now. I want to very quickly check where is my economic calendar on the other side here, because again, this is one, and I do have another one, and let me just double check what's happening there. GDP trade balance. Okay, so I want to see where. So the exports grew. Yep, we can see that for sure. Where are those numbers? Yeah, there we go. We don't have the numbers. So okay, so I know where I can see here is that exports rose while imports dropped. Okay, so exports grew 7.2%. month on month, and imports fell 3.3. Okay, that's an interesting option. That's where we're seeing, exports to the EU were supported by increases in machinery and transport equipment. Okay, interesting. Look, ladies and gentlemen, for now, certainly the fact that the UK economy is kind of okay. But still there are some worrying signs, and honestly inflation is one of them. Anyway, going further down the line here, what we're getting. So industrial production coming out soon from the European Union, but most likely, look, I'm not going to say anything else apart from the fact that probably the spotlight will fall on the PCE, US PCE today, which is coming out, and the PCE, the core PCE year on year is expected to tick up a little bit by 0.1%. The same story for the headline PCE. Where is that one? Where is that one? There we go. No, sorry, 2.9. There we go, 2.9. I take my words back. Okay, so it's only the core that is expected, and let's not forget that this number is going to be for February still, if I'm not mistaken. Let me just, no, January, even like that, January. So we do have a bit of a delay. This is the January figure, and so in March, we're also going to get like a delayed figure, of course, February then. But then in April, going into April, sorry, not in March, not in April, we're going to get the February figure. In May, we're going to get the the March number. Now, why, of course, everybody understands why we're interested in the March figure, because that's when, we should see much higher inflation. Because look, on Wednesday, all right, on Wednesday we saw the CPIs coming out for February. So those were, where's those numbers? Where are those? Let me show you those numbers. Inflation year, there we go, 2.4, the same as previous. Basically, it's not pushing lower. 2.5, the same as previous. So basically, no surprises there. But the fact is that it's flat. That's where, of course, for everybody, it's the worrying sign. Everybody's worried about inflation. Everybody's worried about stagflation maybe going on further down the line. But certainly, everybody will be keeping an eye on the CPIs, the March CPIs, which are going to come out next month. And for the PCEs, we're going to keep an eye in May. What kind of a number we're going to get for March. And this is where the interesting part comes in, right? If we will see a much higher number coming out in May for the March figure, basically the March figure, if it's going to come out much higher, honestly, I do believe that there's going to be some selling pressure. And the fact that also, look at this, the fact that in May we're going to see Jerome Powell leaving. So basically it's kind of his last moment to shine. And we know that right now the US leader is trying to again attack the Fed, saying that we need lower interest rates. The oil price is rising, and you need lower interest rates. I really doubt that this is a good idea, and I think the central banks do understand that and do know that. So long story short, look, I mean, if we're the May moment, it might come in with the whole sell in May, go away situation, right? I'm not saying that we're going to get a sell-off or something, but certainly if what we're going to see is going to be the Fed's beloved inflation metric, the PCE for March coming out in May, and basically, yeah, that's that I don't think that that's going to look very pretty. Again, I might be wrong, but at this point, it does look like that. Let's see. Certainly, the next piece of information to watch out for today, apart from the PCE, is going to be the estimates for the GDP growth rate for the U.S. Canada, by the way, employment numbers, job numbers coming out from Canada, so keep your eyes on that. And of course, the JOLTs. Where are those JOLTs? There we go. JOLTs openings, ladies and gentlemen. So another job number. But this is interesting that somehow JOLTs right now is coming out on Friday. It used to be like Thursday, because it used to be like the big week, like ADP on Wednesday, JOLTs on, JOLTs were Tuesday. So JOLTs Tuesday, Wednesday ADP, and then Friday NFP. Now it's all changed in a way. So these like little changes happen like really carefully, accurately, quietly, and nobody's noticing them, or maybe they are it's like releasing the information, but like as if you're shouting, but shouting very, very quietly. Okay, but you're still shouting, right? So anyway, so look, for now we're watching the JOLTs, we're watching the market reaction, potential market reaction. At the moment, the forecast is for a higher number. But look, the disappointment can come very quickly, so we might see a lower number here. I wouldn't be surprised if we see a lower number, because honestly, I really don't believe right now in the job market, and I don't really believe that it's a very strong one. People are struggling to find jobs. That is a fact, especially people who are just out of in a university, college, or something like that. If you're aiming for a white collar job, then it's a little bit of a tricky moment, in my opinion. So yeah, we'll see how, of course, it will unravel, but at the moment, that's the situation. So that's why I don't really believe right now in better numbers, let's say. And because if somebody's going to say to me that, oh, AI is helping us out, no, I'll stick to my word. Stick to my words. AI is good for businesses because it optimizes the whole process. It cuts costs in areas, and we understand where the cutting of costs is happening. It's mainly labor. So that's why, yes, for the business is good. That's why you're going to see the stock market continuing to kind of push higher in a way, because all your big tech, big companies are enjoying life right now. However, the unemployment will start picking up. So that's my opinion. I might be wrong. However, this is at least it seems like that right now, the tendency. Am I like very much against AI. In certain fields, yes. In certain fields, no. Period. Look, so yeah, we're gonna, what else we have? Nothing else. That's it. Ladies and gentlemen, let's take a look at the charts and let's see what's happening here. Nikkei 225 decline. There we go. Yesterday in general, it was a bad day for the stock market. The US stock market did drop heavily here, I would say, but I'll pick up on that in a bit. But yeah, Nikkei today follows suit, and it broke back below this upside line. So what I want to see here is I want to see the weekly. And I want to see the weekly, and basically it's kind of I would say it's kind of a negative moment here, I would say. Let me just adjust this. So it is a negative moment. Look at this. I mean, we closed on Nikkei below this upside line. We haven't done that. Well, okay, we haven't had this upside line for a while, so it's a little bit on the tentative side, I would say. So maybe not everybody will see this as something very important. However, it's like the first little scary moment here. I don't want to sound the alarm yet, because let's say, for example, we didn't close on a weekly here. We didn't close below the lowest point of last week, but we're just still above the. So there is, like I said, there is this hope that maybe we could rebound back up. I think the preferred option for the downside for me would be a drop below the 52,520 zone somewhere here, and then yeah, we'll go from there, because this area has been a good area of support lately. Although we did have a drop here, we did pierce it through, but we failed to stay below it. So that's why I'm seeing this as a good area of support. If you want to round it up maybe towards somewhere like 52,000 and a half, be my guest. Honestly, you're not going to be wrong here. Just going to be more cautious. Kospi, very quickly, the Korean market. So look, I'm going to say something here that, again, maybe I'm going to be wrong, but purely from the technical side, this to me looks like a bearish flag formation starting to form, right? So if we're going to see a further decline here, drop down, rebound back up, like a kind of a moving sideways moment, then I will say, if all that is going to happen within this rising channel, which at the moment seems like a rising channel, then yeah, this looks like a bearish flag. We have our pole, we have our like movement sideways here, a little with a little incline to the upside. Well, actually, incline is already into the upside, so a little incline. If we're going to see that, then according to all the TA rules, the greater chance for this one is to break out lower. That said, we need a breakout. We need to wait for the confirmation break, and then we can do something about it. At this point, we're just observing. If you think that this is going to be like a little bit on the boring side, you're not going to be wrong there. However, for those who love trading ranges, it could be an option. Again, I'm not saying that this is picture perfect, but it could be an option. As always, nothing is guaranteed, and everything kind of runs at a risk. Shanghai Composite, look, okay, yes, drifted lower, but still within the box here, still above this 4,080 zone. I talked a lot about this, and basically I'm loving this area, and it has been a good area of support. So if we do clear it and we do stay below it, because as you can see, we cleared it a couple of times already, but we didn't stay. If we do stay and we close below this hurdle, now, this is where the interesting part comes in my opinion. We could see further declines. A drop below the 4,080 could, yes, at the same time also could lead to a drop below the 50-day EMA shown here as the green line. So an additional kind of support of the downside scenario. Again, there's a lot of ifs as always, but for now, yeah, this is my little game plan. However, if we do stay above this area, and we then once again we push back above the 4,127, then yes, great, I will consider a move higher. Dow Jones Industrial Average, there we go. Look at this beautiful thing. Yesterday, boom to the downside. Of course, the cash index, the futures did move further. Let me just double check something here very quickly. Oh, come on. Yeah, for 46,000, where are we right now? 46,470. So, yeah, we're below this hurdle. Yep, we are below this hurdle. Look, we're still not below this area, below this hurdle right here, the 47,271, but we're not below this little territory. Let me just mark that for future reference. This 46,615. But wait, on the cash index, it does seem, yeah, we are below this. Okay, we're currently in the cash index, we're below this. So let's see where it's going to open up today. Are we going to see a gap here? Like how big of a gap we're going to see here? And if we do, stay below the 200-day EMA, ladies and gentlemen, that doesn't look very good. This will be, when was the last time we were below the 200-day EMA? It was back in yeah, I mean recently, of course, but no, but then before that, we were back in May of 2023. Okay, so right, was the rebound, point from where the market kind of rallied again. So again, I don't want to say anything else yet, but I would suggest just to be careful a little bit, be cautious, and watch the this area. If we do stay below it, then certainly there is a more room for some downside. And looking at the weekly, honestly, it does look that there could be some more room for some more downside, especially looking at this, like I said, weekly chart, and looking at this 50-day EMA shown as the green line, 46,233. I think it's doable. It's not far from where we are right now. So hey. S&P 500, 6,672. That's where we're closed. But we are, okay, we are here, 6,636. Let me just double check if it's going to load up, of course. If it's going to load up for 6,645. So yes, okay, we are still above this area, but again, similar story as with the S&P, with the Dow. There is some room for some more downside. We have the 50-day EMA, coming closer here. So on the weekly, so keep that in mind, ladies and gentlemen. At the moment, and on the daily, we have the 200-day EMA. So 6,592. That's something that what I'm considering right now. Nasdaq. Okay, Nasdaq is an interesting one. It's 24,414 right now, what I'm seeing on the cash. So basically we are just a little bit fractionally below this the lower side of the box. And in general, look, I said to you before that whenever we enter a range, we look at the prevailing trend. This is like technical analysis. We look at the prevailing trend. The prevailing trend was to the downside, so the greater chance for this one to break out is to the downside. And we saw a few times that happening, but we just kind of failed to stay below this area. So if today we stay below this area, honestly, I think I'm going to be leaning towards that 200-day EMA, or maybe even lower. Let's see the German index, ladies and gentlemen. The German index, DAX. Okay, this one has been up and down here. This is not like common trading, and this is, like I said, this is why I'll have the webinar, because this is a mess, and this is what this is what the problem is right now in trading, and that's why like I said, that's why I'm going to have my webinar here, which you can sign up to, so secure your spot, as it says here, and we're going to talk how we can position ourselves in these turbulent markets, because at the moment this is just a mess. So at this point, I'm going to say this way, that the downside scenario is working out, and I'm going to stick to that. My next target is the 22,943, and then we'll go from there. The FTSE 100. I'm trying to go through these a little bit quicker this time, because honestly, there is not much to say apart from just don't keep your position over the weekend, because honestly, something will come up again, because we had something coming up on this last weekend. We saw oil just exploding to 120. I'll jump into commodities in a bit, but that's what I'm saying. That's why don't keep your positions overnight. And at this point, look at this. Look at the FTSE. The FTSE is drifting lower, and it's just, although it is exposed quite a lot to the oil markets, basically because of the companies that are listed on the FTSE 100. There's a lot of oil companies. In a way, the FTSE should be benefiting from higher oil prices. But again, it's the overall sentiment that's catching it, and that's overshadowing the whole kind of the positive aspect of the oil companies. For now, I will say this way: I'm going to continue targeting the downside. I'm not going to really improvise here too much, and I'm going to just aim for the 100-day EMA. CAC 40. Yeah, the 100-day EMA shown here is the blue line, and that's closer to the psychological 10,000 zone. By the way, remember we were very close to 11,000 just a few sessions ago, and there we go. We are now closer to the 10,000 mark. By the way, how much have we fallen from this peak, from this all-time high right now? We have dropped around, this is the wrong one. I grabbed the wrong one. There we go. Price change. There we go. This is the one. This one around 7.5%, ladies and gentlemen. 7.5% from the tops. Oof. CAC 40. Well, this one did a little bit more, I think. Let me just double check it. Yep, around 9%, closer to 9%. And I think that there is, like I said, this year, there's more downside to come on this one. That's not even worth mentioning, unless it pops back above the 200-day EMA. DXY, yes, perfect. I've talked about this from Monday, and I said that right now DXY is on fire. Everybody wants to go into DXY, not because it's like a super safe haven or something. No, it's because the war is happening. U.S. is involved. Everybody's buying from U.S. right now, military equipment. You need dollars for that. There we go. Demand. You boosted demand for dollars. However, do I believe that this is a temporary thing? Something tells me yes. So we'll see if we can break. If we break the upper side of this range, then okay, this opens the door to some higher levels. But the 100 level, we reached that. So fine. Let's see if we can clear the upper side of this range here. For now, I'm not really in a rush here. I want to see what's going to happen next, but certainly it's a key area of resistance which we are approaching, and that's roughly around the 100.50, something like that. So keep that in mind. VIX, of course, VIX is picking up pace again. Not where we were here on Monday, but yes, it's climbing up. It's 29 around. We're getting closer to 29. VIX is, like I said, is booming here, so let's see if we can shoot up more here. Again, during the weekend, something might happen. Let's jump into the Forex world, ladies and gentlemen. There we go, of course, understandable. The US dollar is strengthening. We're seeing a weakness here. Look, if that's what I'm saying, we're at a key area of support right now on AUDUSD. If DXY does push further north, we could expect AUDUSD going lower here. Of course, that's understandable. So keep that in mind. The box here, I think, no longer is needed. I think that what I'm going to stick to is this little short-term upside line. And I'm going to aim for it right now. But if we clear it, if we break this upside line, then yes, I'm going to go to the downside. AUDJPY, ladies and gentlemen. Yes, there we go. There's finally some sort of logic in all this. And we're seeing some buying action of the Japanese yen because the market is worried. The Japanese yen is picking up interest. Okay, that's absolutely fine. And let's see if we can actually drop further south, because at the moment everything is supporting the downside scenario. I think that we could end up traveling back to the 20-day SMA, but certainly this is something that I need to be very careful about, because if this crosses below the 110.79, then yes, I think that further declines are possible. But at the moment, let's just aim for the 20-day SMA. Ladies and gentlemen, bear with me one moment. Something just came up and I do have to pause a little bit. I'll be right back. Just a second. I'll be right back. All right, ladies and gentlemen, sorry for the little technical pause here. Yes, these things happen when you're running a live show, and yes, I mean, and you're you're running this one from home as well. Well, just for today, but yeah, apologies for the little technical pause here. There we go. We're back to normal. So, AUDJPY. That's what I'm saying. For me, the problem is right now that overall, it seems like I was hoping to see AUDJPY even lower. That said, to me, it shows that the market is not really kind of stressing too much, right? And also, I think that the problems in Japan, the overspending are driving the overspending of the current government are driving Japanese yen like further, like or should I say, devaluing it further. So normally you would have to see, in the terms like these, Japanese yen picking up pace and like just picking up in buying interest, but I think that the market doesn't believe that this war will last for too long and we will resume again. I think that the market is kind of yes, like I said, I see this as a perfect like buy the dip moment. However, somebody might say, but hey, is this not is this not a big thing for is this not the beginning of a crisis or something like that? Is this not a beginning of the big sell-off? For me, the big sell-off will be if I see, for example, I'll go back very quickly to let's say Dow Jones. So right now in the Dow, you can see that we have from the all-time highs, we kind of dropped for around like 7.6%, right? When we were in April, when we were like seeing the big board of tariffs here, look at this. From this peak to this peak, we dropped around 14%. So that was like a big, problem. This is where the fear kicked in. Now, I would say this way, that it does look like a little bit of a profit-taking moment. If we see a reversal back up, I think we will see a reversal back up. But then, let's say we fail to go back, let's say, to the all-time high, or we fail to retrace more than 61.8% on the Fibonacci retracement, then I think that this is where it could shift. But again, I'm really, that's why I said in the beginning of this webinar that May could be an interesting one. Is this going to be the moment where sell in May go away? Or, because for example, in April, we'll see a rally, a recovery moment, everybody will be getting excited. And then let's say we start seeing PCEs really, coming out high, and CPIs are coming out high. And showing us like crazy numbers due to the whole oil disruption moment. And we know that the Federal Reserve is not going to go for more rate cuts. And by the way, I forgot to mention that, yes, this is what the situation looks like right now. And if you remember, I talked about this a while ago, and actually not a while ago, recently. Look, we're expecting only one. Oh wait, look at this, changed. I just talked about this on Wednesday. It changed now. We are not expecting a rate cut at all. So there we go, ladies and gentlemen. So there we go. So and that's what I'm saying. So when May is gonna come, I'm really interested to see if this is not gonna shift. You see towards this now. We have this moment here. We have this moment here. By the end of December, are we not going to see a little percentage coming out on this side? Like a little, percentage of little probability for a hike. Ooh. Now that could shape up the market, because if inflation, if CPIs come out, if PCEs come out on the higher side we see the numbers which are going to be coming out in May for March, if those are going to, like, let's say somehow shoot up quite significantly, we're not going to see, not only going to see the stock market crashing, but the reason why we're going to be seeing the stock market, well, not crashing, let's not use this word, falling a little bit, is because there's going to be a probability number here for a rate hike. Because honestly, if inflation is picking up higher than going up, how you're going to justify the rate cut? So that's why I think that the U.S. leader really came out, like recently came out yesterday. He came out. He's encouraging the Federal Reserve to go and cut rates. And honestly, because he knows that, I think that, or he doesn't know that, but somebody told him that this is what could happen, that you will have to see rate hikes. So that's why I think the Federal Reserve right now, or Jerome Powell, doesn't want to give him that, because I think that, it's kind of a little bit of a revenge moment, which is fine in my opinion, because you started it, so I'm gonna do everything, to not to give you what you want. So yeah, like I said, it's going to be an interesting moment, and this is where, like I said, the thing that the shakeup could happen. So right now, what do I believe? I believe that there could be a little bit of a reversal back up at some point, but then getting closer to May, yeah, that's going to be a bummer. Anyway, going back to the Forex market, because I jumped kind of off from that. AUDJPY, honestly, I'm going to lean a little bit more towards the downside, but only up until this area right there. Yeah, let's have a look at the EURUSD. Yep, continues to drift lower. I talked about this. I threw out this to our VIP clients when we were still here hanging out on above this upside line. I said, keep your eyes on the what was that, 1.1573, something like that area, marked by the lowest point of January. Boom. Fantastic clearance. I think that 1.1392 is the next target, and this is the lowest point of August of 2021. Sorry, 2025. The lowest point of August of 2025. Yeah, so what else? EuroCHF. Ooh, this one's interesting. I like this one, but it's getting messier. Oh, look, I'm not going to touch this one for now. It's at this point, unless you guys, whoever's watching this right now live, let me know in the comments. Is there an index or an instrument or an index or a commodity or for a pair or a crypto that you want me to look into? I will, if I have knowledge about that, then I'll pick up on that. So yeah, please do. Like I said, this is an open session. It's not a monologue, as I keep on saying. This is a dialogue here. Okay, EUROJPY, okay, logical, drifting a little bit lower. Euro to the downside because the dollar is strengthening a little bit, and also the fear kicking in a little bit more as well. So Japanese yen is picking up buying interest. Is it enough to bring some sort of like major stability, or to the Japanese yen? No, I think the Japanese yen could still continue devaluating unless the BOJ steps in. Next week we'll see, because next week we have the central bank extravaganza. Yeah, I'll pick up on that in a bit. So yeah, ladies and gentlemen, in terms of these pairs, look, Euro GBP, what's happening here? Ooh, okay, interesting. Very near key area of support. This worked out nicely. Okay. This worked out nicely. So now I can drop it this way. So if we do drop below the 0.8612, 13, something like that, then yeah, I'm going to lean further south. GBPUSD. So not loving the numbers today. Not loving that month-on-month figure. Okay, so the trade balance, probably that's not the worrying part. The GDP is the worrying part, and also the strengthening US dollar here. All this combo is pouring into this negativity here on GBPUSD. We're seeing a further decline, a further move within the falling channel. We have to respect these patterns. We only stop respecting them when they start breaking one of the sides of the formation. At the moment, where everything's within, that's absolutely fine. USDCAD. Look at this. Look at this. The US dollars, because the US dollar is picking up pace. I said to you, keep your eyes on this triangle pattern. This is what I'm watching. This is the pattern. This is the interesting bit. Not maybe picture perfect here. Not all the lines are, aligned carefully with the lows and the tops, but roughly this is the area. Look at this. This is how nicely it's playing out. My question right now is if we're gonna see a breakout, or actually which breakout, where are we gonna see this? Normally, according to all the TA rules, this pattern should break to the downside. However, for this to happen, DXY needs to find that resistance near that 100.50 level, which I talked about, this upper side of the range, and oil needs to shoot up, which in a way quite possible, to be honest, because oil is is the topic number one right now because of the tensions, the conflict, yep. For now, this is what we have to live with. And honestly, everybody's like talking about now, prices on oil higher than, maybe, or like closer to the $200 per barrel. If something like this happened, this is a major blow for the economy. Honestly, I think now. Okay, now then that's when we would see problems. Of course, certainly, that's when we could see problems. So, for now, we're watching this very carefully. USDJPY, ladies and gentlemen, we're near key area of resistance. There we go. Boom, we hit the key area of resistance, 159.45. This is what I'm watching. So if we do get a breakout here, then yeah, I'm going to go further north. But again, look, DXY is very close to its key resistance. If it's going to stall there, we could see actually this one stalling here as well. And it is stalling right now, so we could see a reversal back down a little bit here, and then we'll go from there. If we're looking for some higher levels, then there is still room, but we need to see the body of the daily candle remaining above this 159 point. Let's round it up 50. So yeah. I think this is going to be the more acceptable option. And finally, USDCHF, beautiful move here to the upside, of course, understandable. It's all understandable because the DXY is moving higher. So hey, there we go. We're I threw out this little piece here yesterday, I think, if I'm not mistaken, on the morning note. So we were still here. I said that look, we do push above the 0.7818 and we stay above it, then yeah, the next target is the this 0.7878 or the upper side of the rising channel. Ladies and gentlemen, gold. There we go. Gold to the downside. And, I said to you before, and I'll say it again, I am still somewhat bearish right now on gold in the short run. Medium term, I don't know, because it's a tricky one. Look, I spent a lot of time in the beginning of January as well on this, and I said to you that look, when we were flying high here, look at this parabolic move. At some point, this had to stop. At some point, we had to see some sort of like negativity, and right now, this whole situation, with the U.S. in Israel starting this war. This kind of, this is what we're seeing right now. We're seeing a little bit of profit taking. The market did already kind of, have a rally. Now I think that everybody's just kind of trying to get some money from somewhere to support themselves. And when something like this happens, gold is good. Gold is always attractive. You will just take it. You will buy it like on the lows. You will sell it when it's going to peak like that. You're going to get some cash. The gold is going to drop. Then you're going to, when the time is going to get a little bit better, you're going to say, hey, you know what? I'm going to start investing into. I'll start putting money into gold and silver again. And there we go. You're going to have the same cycle all over again. So that's why everybody loves gold. Everybody likes, this precious metal, because when we need to see a crash of some sort here in gold and silver. That's logical, and we need to see some sort of like a drop. And I talked about this before, and I'll say it again, that look at this. This is the third time in history we're having something like this, especially in silver. I'll jump into silver in a bit, but this rally, this at some point will have to end, and it's currently getting a slowdown here. So if I apply my Fibonacci level from the lowest point of 2022 to the all-time high, you can see that we still have some room towards the 23.6 here, and this is a good area of support. 4,600 kind of in the 60 zone, around there. But in general, I do believe in a little bit of a lower number than that. To be honest, 4,000 at least. I think that this is quite doable. So yeah, and we fix this cycle, and then we kind of. We start piling up on gold, maybe a little bit lower here. But look, if we do see a major drop here, I'll say it this way, that whenever something goes up or goes down, and you think that it has already reached like an extreme level, it will go a little bit more. So if you think that maybe 4,000 is like something like, oof, like something like a crazy, correction here, I would say 3,600. I would actually go for 3,600 here, but again, that's me. But I might be wrong, so keep that in mind. So yeah, for now, I am watching this very carefully. Like I said, gold and silver are the ones that are picking up right now my interest, because look at this. You remember these major moves when we were hitting 100 and above 100, 120 here and stuff like that. So there we go. We had a major decline here. Look at this. It was just crazy. It was really, really crazy. This was December time. And oh, sorry, December time. December time was here. January. This is January. This is 120 at some point. What was it? 121. There we go. If we apply the Fibonacci again as well on this one, and if I draw it from this lowest point of 2020 to here, then you'll see that we have done the 38.2 already. There we go. If I draw it from this point here, the lowest point of 2022, the same as on gold, then you'll see that yes, 38.2, we've done that. Good results here, ladies and gentlemen. Look at this. Major holdups, and I think there's more room for some more like downside. And in general, look at this. This is, like I said, this is the third time we're seeing something like crazy like that. Last time, 1980, right? This was the actually, let me just put the chart here, another chart. Let me just put oil in this picture. Where's oil? There we go. And let's put a monthly chart here. Look at this. So if I'm going to look at the 80s here, look at this. In 1980, there we go. There was a big rally here from what? From we were back in here, the $14. We rallied like to $40, crazy. Yep, there we go. There you can see the lines there. Then we had a major decline in oil, and we also had a decline in silver. Then there's another problem here. 2008, that's the big rally in oil. By the way, there's nothing happening here. Silver did rally after that in 2011, but 2008, there was a little spike, of course, in silver as well before that, and then oil crashed, and then this one crashed as well. Oil then picked up. So now we're seeing another moment here, and I think that what could happen is that silver could also, maybe still remain afloat. I do see silver actually quite as an attractive metal. However, it's attractive, but at the same time, probably a little bit more volatile than gold. For now, what I'm saying, I'm trying to find like some similarities here, and not similarities, some sort of like a pattern, basically. We can see that oil spikes, and I think that if oil starts drifting back down at some point, I think silver already will be on the lower side. So if oil does spike, I think that silver could actually drift nicely to the downside here. Well, again, let's see. We're not going to over speculate here in this one, but do I see silver to the downside? Yes, I do, because I do believe that I think that we will establish, by the big decline here, we will establish a new norm for silver. So like, for example, after this rally at the end of the 70s, beginning of the 80s, then we established a new norm. It did kind of drift lower. Again, it was like something around like $5-6 here. Then we rallied again. Then we established their area around the 20s. Then we rallied again. We declined. We established their area around the 25s. So this decline, I think that we could end up establishing a norm somewhere near the $50 mark. So this could be the new norm, the new normal price for silver going forward. So keep that in mind. Again, this is just a little bit of analysis from me. I don't know if I'm going to be right or wrong. However, judging from the previous price action, I don't believe that silver is going to just sit here at all the time. We need to see some sort of, like, I think that also it may come also with the stock market dropping, because I said it before and I'll say it again. Whenever we see a major decline, it's easier for the government to just kind of sell a little bit of precious metals, get some money for that, to support the economy, and then kind of and then kind of jumping into these commodities at a later stage. We'll see how that plays out, of course. So anyway, let's jump into very quickly into platinum. And yeah, so platinum looking bearish a little bit. I think that yes, there is a chance of a drift towards this upside line. And by the way, you remember I talked about this level, the 2,299. There we go. We pushed a little bit above it, and now we're back below. Palladium also drifting back down. I do like palladium. I actually prefer it even more to silver and gold sometimes, but it's kind of, I don't know, I have like this weird feeling that this is one of the metals that could spark interest later on, but again, we'll see. Anyway, look, I'm leaning a little bit more towards the downside, 1,450 at least. This is what I'm targeting, and then we'll just take it from there. Back to the daily, and copper, very quickly. Copper is still holding up. It's okay. Copper is more needed than any other metal right now. It seems like that. Let's jump into oil, ladies and gentlemen. So with oil, okay, we saw a major blow up here on Monday, right? And then a major sell-off. Look at the speculation. This major decline happened here when we saw, when we heard the U.S. leader saying that this war is not going to last for too long, but then at the same time, next few days he comes out saying we will drag it as long as we want it. That's the world we live in right now. And look, I would say this way. I talked about this before, and I'll say it again. I talked about this idea here. If we do push back above the $95 mark here, and excuse me, if we do stay on the WTI oil above the $95 mark, which is the highest point of September of 2023, or in other words, the highest point of 2023, if we stay above it, I think there is a chance for this one actually to fly back up. For me to consider the downside, I will take a bit of a conservative approach, waiting for a drop below the 87.5 zone, somewhere here. And then this way, I'm going to lean a little bit more towards the downside. Brent oil. If yeah, we're sitting above that $100 mark, and honestly, look at this. This is basically the level of 2022 when the U.S. When Ukraine war, the war in Ukraine started. So we saw a major run up here. I remember people were also talking about the whole $200 mark on Brent. 138. That's what we reached, and then we sold off. So at the moment, I don't want to rush into things, but certainly it's becoming quite interesting. And I think that I do believe that there is more room for some more upside for oil. Maybe actually these levels are actually becoming quite attractive. The 128 on Brent, I think it's quite doable if this whole mess continues. Because this 126, 28 zone is actually becoming quite an interesting target. So that's why I will aim for it. And also, this is kind of aligning nicely near this downside line. So this downside line is also next good target in a way, so which is drawn from the highest point of 2008. By the way, remember the little financial crisis we had, 146.7.5 zone here on Brent. There we go. That was spectacular. And then we sold off majorly. Look at this massive drop here, all the way to 36. Honestly, this was just wow. It was just spectacular. So I'm not saying that this is going to repeat, but certainly I think that more upside here on oil could be possible if the whole situation does not improve in the Middle East, if U.S. and Israel will continue their attacks, because at the moment, we have to look at who started it. They started it, so nothing was like this happening before. So they started it. So there we go. Now the whole region is in flames, which is it's unfair. You're further away. But you know, the people who are suffering are around. So as always, and a natural gas, ladies and gentlemen, natural gas. Okay, look, in general, so far so good. I talked about this idea of a falling wedge. It broke out to the upside, great. So my next target is actually somewhere around the 50-day EMA, the 100-day EMA on my daily chart here. And basically that's kind of roughly around 3.6 zone, something like that. So this is a good target in my opinion. Still have room. So let's see if we can travel there. Bitcoin, ladies and gentlemen, the crypto world, Bitcoin is flying nicely to the upside, which is great. So we're once again approaching this key area of resistance, which is around the 74,000 mark. But first, I think we'll hit, I think we might hit the 50-day EMA here shown as the green line. So then we'll see what's going to happen next. But the 74,000 is the area that I'm watching very carefully. It has been a good area of support in the past, resistance as well. And if we clear the 74, look, I think there's room for this for a test of the 100-day EMA together with this downside line. Bitcoin Cash pushing back up, trying to hold here, and this 445 zone did provide good support. So we need a drop below that in order to go lower. But at the moment, everything seems to be fine. We're going for a little bit of recovery, in my opinion. So yep, keep that in mind. Let's see if we can go further north here back towards that 500 level. Ripple, very quickly. Ripple is, look, it's knocking on the door of this downside line. I said it before and I'll say it again. Yes, we're in a descending triangle pattern, but I've seen these happening, you know, breaking out in the other side, to the opposite side. So maybe this is going to be one of those moments. I don't know, but certainly if we start clearing this downside line, ladies and gentlemen, I think that yes, further upside here could be possible. Ethereum is also trying to knock on the door of the upper side of the box of the range where we are currently stuck in. So let's see if we can clear that 2,169 zone. If we can, great, more buyers could join in. Ethereum Classic, I'm loving this one. I like this one. Still in general, they're all, you know, ranging in a way, but there's a little bit of hope here for the bulls. Litecoin, similar story. But no, this one is breaking the downside line here. Look, it's a tentative line, don't get me wrong. This one's taken from the high of the 9th of November, or actually the highest point of November of 2025, and we're breaking this downside line. So that's a good positive sign. That said, I need a break above the 56.8384 zone-ish. This way, more buyers here could join in. Dogecoin also picking up buying interest. That's great. So let's see if we can actually end up traveling here a little bit higher here. Look, initially I cannot draw the arrow that short, but initially I'm targeting the 50-day EMA. It was a good area of resistance in the back here in February. Let's see if we can retest that. Polkadot is interesting, but it's like really struggling, and I'm trying to you know, I'm gonna get more comfortable with the upside if we do push above the 1.70 territory right here. If we do that, I'm gonna aim for higher levels. I'm gonna aim for that psychological 2 level, maybe even a little bit higher, and then we'll take it from there. And finally, Tron. Tron is one of my favorite ones, and actually, there we go. Look at this. It is pushing back up. It's trying to make its way back up. Yeah, look, this one behaves like more like a currency, like a proper currency pair. So I'm going to say it this way. A push above the 0.29 kind of 15 zone, somewhere there, could be a little bit more attractive for a few more buyers. Because at the same time, we'll push above all the EMAs on the daily chart. This could be seen as a positive. Then yeah, like I said, more buyers could join in. But at this point, we're still stuck. Again, I'll use the same terminology, box here, and we need to get outside of the box. We need to think outside of the box. But from the downside, I need to see a drop below the lower side of this range near the 0.28 zone. But I think that maybe we could start looking at some lower levels already if we do clear this little upside line. Let me just check if this, yeah, this makes a little bit more sense. So I think that this could be a better option here. This upside line drawn from the lowest point of the current lowest point of this year, ladies and gentlemen. So Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. Sorry for the little technical pause that I had to do here today, but hopefully it didn't disappoint you too much. I didn't disappoint you too much today. So, ladies and gentlemen, thank you for watching and listening. As always, yes, don't forget to subscribe to this webinar. You can find it on our website, or if you don't find it here, then you go and learn and go into webinars and basically click on this one, register now here, and I'll see you on the 26th. But of course, I'll see you on Monday, ladies and gentlemen. As always, stay safe. Yep, of course, that's something the very most important right now. Stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you on Monday. Bye for now.